Hi, welcome to Market Alert for Thursday, the 31st, Halloween, the day that, or last day for Draghi, and make way for the criminal Lagarde tomorrow at the ECB. However, on another note, before we get to all of that, we've got some news about Bitcoin. It's just hit 1 billion in all-time transaction fees. A lot going on, even though the price movement has been fairly narrow over the last few days, but certainly behind the scenes, a lot moving as far as Bitcoin is concerned. We'll start off with the daily. It's an interesting thing here. The market's making lower highs and has made its way back to the 200 MA, which says for me that there's going to be some sort of correction following the Chinese announcement last Friday. So I'd be inclined to draw in the 76% retracement. It looks like there's going to be a bit of a correction going on here in this market, with prices failing to hold the 200 MA at the moment. That's what it's showing at the moment. The 4 hour also making its way back. It's already below the 20 bar moving average, so the bearish side at the moment seems to be holding in this market. And yesterday, as I said, that the market was below the 200 MA as prices crossed here. It has remained this way. It continues to move to the downside as well. A couple of trades there to the downside, but nothing really. What's fascinating, again, I've said this many times, is how these spikes in volume bring the market back. And overnight, the market is sitting below the DP and the 200 MA at the moment on the short side there. So, yeah, it's still fairly quiet, but a lot going on behind the scenes as the market consolidates after last Friday's announcement and over the weekend with regards to China looking to get into the Bitcoin market. Meanwhile, in the main markets, the Fed cuts rates. What a surprise. Rates on GDP beats expectation, sending stocks to new all-time highs. So the Fed's cut rates, get this, think about this, on a day that GDP beats expectations. It's incredible to think that they are reducing rates when the stock market, one, is at all-time highs, and two, the economy is supposed to be doing well, and unemployment at all-time lows as well. What are they going to do when it goes pear-shaped? That's the question. And speaking of pear-shaped, let's just have a look at the Dow and its reaction yesterday. We see the market moving higher in the daily chart. We're still not back to the all-time highs in the Dow. The S&P certainly is, but the Dow hasn't got back to the all-time high, which is the 27,401 level. Again, look at the volume for yesterday. It's paltry, nothing. And if we look at the price action for yesterday, we start off with prices closing below the DP level with selling. We see some buying come in, and then we see this bar. All of a sudden we have a 70-point drop, and that was because the Munchkin, if we can find him, here we go, yeah, Steve Mnuchin, the Treasury Secretary, the former Goldman Sachs programmer. China's purchase commitments for US agriculture will take some time to scale up. That's all it was. That's all it was behind a 70-point drop in the Dow. So how weak is this market is the question. When you can see the market react like this, and then it's brought back, and then it comes back here, 76% retracement before moving higher, and then waiting. Of course, it's going to trade in a range waiting for the Fed. This is the market's reaction. You see them buy in. We get to a 76% retracement. We get through the averages there, through the 200 MA, and then the market moves higher. The gap up here is overnight, but prices now are drifting lower. And my question to anybody is, what is this market going to have to find in order to continue to move higher? That's the question. We've already got 60 billion a month in QE, even though Powell says it's not QE. we've had interest rates reduced from over 2% all the way down to 1.75. It's more lower than that, 1.25 I think. And the market isn't moving to the upside. So there's some struggle going on here. And it isn't going to take a lot to send it to the downside. And the implied volatility, as we see here, also dropping yesterday, which you'd expect. But watch these levels. If we get a bit of an up move over the next few days, watch for the implied dropping down to these levels. There is a correction coming in this market. I have no doubts about that. Yes, we could have the Santa rally as we normally get, but this market is going up on fresh air. And I mean, it doesn't get any better than the Federal Reserve printing money for you and dropping interest rates for you, and it's struggling. So something isn't right there. By the way, the yield for yesterday, while we're dealing with this, dropped back slightly, 0.16. But you can see that through October, let me just highlight this, you can see there that we are turning green now. You may see an acceleration in this to the upside going forward. So just going back to the Dow, overnight price is drifting lower. Watch the DP level and the 200 MA, because a break below this, we'll see prices reverse throughout the whole day in the daily chart. The market needs something to really boost it. Meanwhile, in the pound, this moving back to the upside now. There is an election date set, so should move to the upside a bit. Now some of the uncertainty with regards to Brexit has disappeared. It's all gone off the table again now. There'll be no mention of it. It's all going to be about the election now, until was it the 9th of December? I think it is, somewhere around there. So at the moment the pound quite positive about events. I think it's because like I say, the Brexit situation as news has gone off the table at the moment. There's the pound's reaction last night to the interest rate cut, but during the day yesterday not a lot going on for the pound there, just stuck in a bit of a sideways range. That's in the 5 minute. Let's try the 15 minute. That's the one we normally look at. That's more like it. So the market attempted to move higher, and we can see straight away that it ran into trouble here. From here down to the low, you can see there, stopping at the 76% retracement before moving lower, finding support at the 200 MA, drifting back towards it, and then say you've got the Federal Reserve announcement there. And what else have we got news-wise? Yesterday also Deutsche Bank earnings came out, so they weren't that good, and you can see prices dropping sharply there from over $8.20 down to $7.37. Again, we'll keep an eye on the 640, but not good news from Deutsche Bank yesterday either. So everything conspiring towards a correction. All of the economic data as well. I mean, Hong Kong's now gone into recession. Germany's on the cusp of recession. Italy's already in recession. It's just a matter of time before everybody else catches up after the last 10 years of printing and printing and printing. The next financial crisis is just around the corner by the looks of things. So that's it for this one. Like I say, keep an eye on the Dow today in particular, because we've got a situation where the market went up on fresh air yesterday, and there's nothing really to move this to the upside, unless there is a Trump tweet, of course, or the Munchkin comes out and says something else. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.